So in this video, I want to talk about NIO, and they have a couple of things going for themselves. We have NIO Day coming up later this month. The past 7 months, they have delivered 20,000 plus EVs, and management is talking about the company breaking even in 2026. Now, I know it looks pretty ugly, but before we dissect the price action, let's actually get into the news, and then I will give you my short-term target in 2025. So there's an intense EV price war going on in China. The price war has clobbered many automakers' earnings results, and a number of competitors hinted that the situation is likely to get worse in 2025. That said, there's reason to believe that despite the price war and intense competition, NIO's delivery growth will finally impress investors next year. Now, NIO investors have a lot to process in December with the current 3-hour-long media event and the upcoming NIO Day 2024 on December 21st, where it officially launches their ET9 and the Firefly brand. Now, initially, investors might have been disappointed that the company expects its primary NIO brand to grow only moderately in 2025. But that's not where the growth story is currently. Thanks to its sub-brands, Onvo and Firefly, it's not only increasing its deliveries, but it could double them next year. Now let's talk about margins. Many expect the company's margins to feel the pressure of the ongoing price war in China, but during the third quarter, NIO's gross margins increased to 10.7%, up from the prior year's 8%. Better yet, vehicle margins jumped from 11 to 13.1% over the same time frame. Now, one quarter doesn't make a trend, but it does give investors hope that management can control costs amid the growth of lower price brands. And so, investors would be wise to remember that NIO is a young company, remains highly speculative, and should only be a small position in your portfolio. Further, despite the EV makers' aim to break even in 2026, don't be surprised if NIO's net losses still widens before it improves. Now, from a technical standpoint, if we go out to the monthly chart, you can see price is selling at the lows, aka a discount, aka within an accumulation area. Scrolling down to the weekly chart, we had a double bottom in which price pushed higher, forming that weekly buy level. And so I'm anticipating a bounce. The charts are suggesting a bounce. Now, going to this Picasso, we can see price now is below this key 200-day moving average in yellow. Typically, when prices are below, you are in a secular bear market. When prices are above, you are in a secular bull market. However, what price action has going for themselves and investors, again, we are in this accumulation area. Price is trading at a discount. And so I am looking for some type of double bottom, W pattern, very similar to what we had back in August when price formed this weekly buy level. One touch, two touch, and then the move higher. So, can we get that again? Only time will tell. But if you are risk taker, charts are suggesting get long at $4. Risk adverse, maybe scale in at $4. Thanks for watching. Subscribe. Please like the video.